I'm glad we discovered you're a Gemini. But thanks for coming back in. We're going to just move on now from our last time. I just want to ask, now we set up this business, I need to sort of basically keep records. Obviously, we're not going to do manual records anymore. So if you were going to recommend something to me, what sort of packages are out there that I could sort of like look towards getting?
Yeah, so there's lots on the market. Even some bank accounts that you have, business bank accounts, they can offer accounting packages so that you can categorise your income and expenses, something as simple as that. Or you can use the sort of more formal accounting software, such as something like Sage or Xero.
Is Sage for a bigger company or just Sage is for everybody?
Sage for everyone, really. There's different levels that you can have. So there's the cloud-based version, which you can scale that from very small company with just sales invoices and expense recording, up to sort of big. The biggest companies could have it, and it would be desktop version. And
so is there different levels of Sage? Is there Sage for, say, the basic bookkeeping? There's Sage for, say, a multi-million-pound company?
Absolutely, yeah, that's it. And it obviously increases like the cost of it, the subscription increases with the features of the software. So it's whether you want very basic, just record your income and expenses, or do you want to do sales and purchase orders on Sage and sort of raise the invoices automatically and reconcile the bank and VAT returns and CIS returns, and so you can do everything in the one place.
So what I might do then on a later episode, we'll have a look at all the packages. We'll have a look at Xero, we'll have a look at Sage, and we'll have a clear in depth on what they offer you. Because like you say, like Xero might be good for a certain level, and then Xero might take you to this level, but it might not take you to where Sage takes you.
Yeah, absolutely.
Do you think so, or do they all cover the same?
I think broadly they cover the same. It's probably down to personal preference. So if you are entering the information yourself, then you might like the feel of one compared to the other. If you're using a bookkeeper or an accountant, they might have software that they offer.
What about if I was a solicitor? I've just decided to set up. Would they have a completely different software to sort of the normal software?
Absolutely, because that's going to be a specialist industry where you need to record certain things in line with the solicitor's accounts rules. So they have to keep the client accounts information separate. They have to record the office bank account. So definitely, once you get to, if you're in a certain industry, such as solicitors, or even if you're construction industry, then the specialist softwares then make the recording of the project that much easier.
Yeah, because they're much more complex, aren't they?
Absolutely, yeah.
But for the average chap who's starting up his small business, he's going to basically be invoicing, purchases, and just day-to-day VAT, things like that. And
exactly.
You can start off with a reasonable small package that's going to give you that. And like you said, there's banks who even supply that now.
Yeah, absolutely. So some of it is free, and for, you might be looking £20-30 a month for a subscription that would offer you sales invoices and expense recording the bank, and it's a lot easier now because you can link your bank account to the software, so it automatically pulls down the information, and then you can just categorize it. You can, if you have a bank receipt and you've posted a sales invoice, then you can match that receipt against the sales invoice, all within the one package.
So the main things to be doing when you've just started, and you basically have to record all your transactions for the year. So you're invoicing, you're putting in your purchases, you've now registered for VAT, so you'll be doing your VAT on there. I've now taken on 2 employees. PAYE?
Yeah, so again, that can be run on software such as Xero or Sage. So obviously with the employee, you would have a contract, so that would give you the hourly rate or annual salary that's agreed. And so you put that information into the software, and then everybody is given a tax code which tells you how much personal allowance the employee is entitled to, so that the correct amount of tax is recorded, and that's done by the software, as long as you put the correct information in.
So we know now that the government have said you have to offer pensions.
Yes.
Where does that come into it? How do you do that?
Yeah, so again, that would be when you put the information in on the employee, and if they meet the eligibility criteria for the auto-enrolment. So the way that it works is that employees are automatically enrolled into the pension. So you have to enrol them into pension. It's up to the employee if they want to opt out of it, but it's automatically you put them into the pension.
Okay, and what's the obligation now for the company in finance? I mean, what's the contributions at?
3% over the threshold, which is currently £6,240 a year.
So now you have to enrol them unless they opt out?
Yes.
And for that you have to make a contribution
of 3%.
So that's an extra cost to if you're taking staff on. It's something to be aware of if you are taking staff.
Yeah, definitely. That and the employer's national insurance, which has just gone up. So when an employee earns over £5,000 a year, you're paying 15% national insurance
Explain
contribution.
that a little bit more for people who are going to take on somebody.
Yeah.
So basically you've taken on a member of staff,
mm-hmm.
You're giving them a salary of $30,000 a year.
Yeah.
But you're not really, because you've got to make a contribution now to their pension.
Yes.
And an employee's contribution.
Yeah.
So what is that? And how much does that add to the cost of having taken someone on?
Yeah, so that £30,000 a year, then you have to account for really the bulk of that is eligible for a contribution, so an extra 3% on top of that for the pension contribution, and then an extra 15% for the national insurance contribution, because that threshold, as mentioned, has just come down. So you only get £5,000 of salary that you don't have to pay employers' national insurance on. For the national insurance employers' contributions, there is an employment allowance, so you actually don't have to pay the first £10,500 a year of employers' national insurance, and that helps sort of the smaller businesses keep their costs down.
Yeah, because obviously before this came in, you suddenly got 30 staff.
Yeah.
Suddenly they brought in that you've got to make a contribution towards their pensions.
Yeah.
It's quite a hit, isn't it?
Yeah, that's right. And I think that's why it did come in stages, sort of the larger businesses first, so people had time to prepare. But it's definitely an extra cost that businesses need to consider.
And is that contribution going up? Is it something that...
So the employer's contribution for pension, there's no talk of that increasing at the moment, but national insurance has just increased recently, so that's at 15%. It may increase in the future, but...
So basically I've now got 5 employees, and I'm looking to give them healthcare.
Mm-hmm.
Well, how does that affect... One, how does it affect me as an employee? I'm trying to give them, and how does it affect them? Is that do they gain personally? Do they have to pay a personal contribution?
Yeah, so I think it's an extra perk to offer your employees. It might be something that another company doesn't offer. So it's a way of sort of giving back to them and showing value to them. On the tax side of it, you've got the company has to pay what's called Class 1A national insurance on the value of the health benefit that's provided to the employee, and that's at 15% every year. So if it's £1,000 of in total of medical insurance that you're paying for, 15% of that you'd pay as an extra charge to HMRC each year to account for the value of that benefit. For the employees, it's taxable for them, so whatever portion of the medical insurance cost relates to them, that gets added to their income as extra employment income, so they'd be taxed on that.
Okay, so that's good. So basically now I've set my company up, I've basically got my package for doing all my bookkeeping. I've now got my 5 staff who are now benefiting from Nest healthcare. So now I'm all ready to go. One thing we haven't covered, and I think it's quite important, is insurance.
Yes.
So you've got different insurances. You've got your liability insurance, personal insurance, and then we'll have a little chat about the partners and relationship.
Yeah, that's it. And I think that's why early on, although you're sort of cost conscious, it's a really good thing to invest the money in to have that security, and speak to an insurance broker to see what's available and the cost of it, and then you can make an informed decision of your risk and compared to how much the premiums will cost. So if you are in a limited company, and then there's directors insurance, so that can give some protection for the directors for their personal liability, but also if anything was to happen to the a director, then the company can have a payout, which also means that it would have some funds to maybe go and find somebody else
to replace.
Exactly.
Yeah, because you've got basically in a company, you could potentially have someone who's a really key part of the company gets very ill or unfortunately dies. And you really then, the company does need some way of sort of like compensating for that. And it's really only insurance that can do that.
Yeah, that's it. I mean...
Would they cover that, insurance?
So it's a bit like life assurance. So if you have personal life assurance and there was a payout if you were to die, then instead the company is the beneficiary. So the company gets the money to be able to sort of cover any extra costs of keeping the company running while the other directors...
So really, regardless of size of business, even if you're a sole trader, really... everyone should have an insurance plan.
I would definitely recommend it. Yeah.
You know, 'cause just in case you have an injury and you can't work anymore.
Yeah, that's
anything
exactly.
like that.
Yeah.
So really, I don't think people do. I think people need to be aware of that.
Yeah.
That there is an insurance that would cover them if they, if they were out of work, unable to work, at least for a period of time.
Yeah, that's it. Exactly.
Get them back on track.
Sort of loss of earnings. Cover.
Yeah, anything like that would be covered.
That's it. And even with the cyber security threats, obviously lots of scams and businesses, especially smaller businesses, because they don't tend to have the same security and infrastructure that large companies would invest in, so they can be more susceptible to cyber attacks, and they can hold your information hostage or to ransom. So it's something to consider.
It's probably become a big issue now, insurance.
Yeah, I think
all
so,
these sort
yeah.
of things, because people are getting, like you're getting cyber attacks. What's the situation on, you're invoicing people, they're not paying on time. How can you sort of like get round that? Can you sort of factor out, or can you?
There's different options. So you can use invoice discounting or factoring. So that would be a factoring company would pay you for that invoice when you raise it. So you get the money immediately, and then the factor company try to recover that money from the customer. It can be the case that if the customer hasn't paid after a certain period, maybe 90 days or something, then you may have to pay that money back.
All right. So basically, yes.
So it's more to help with cash flow.
Yeah.
But if there's a bad debt, then you could still suffer the
Where are you
loss.
with bad debts at the end of the year with your tax? Are they written off? Or?
Yeah, so they can be written off. For VAT, you've got two ways of dealing with VAT. So if you raise a sales invoice, you're VAT registered, then you'd have to account for the sales VAT on that invoice. If you prepare your VAT returns on an invoice basis, so that means that your sales invoice would go on your VAT return based on the date of the invoice, then it can mean that you end up paying the VAT to HMRC before you've actually received the money from the customer. Right. So that can affect your cash flow. So there is an alternative way of preparing your VAT return, which is under the cash basis, and that gives you a bit of automatic bad debt relief, because you're only paying VAT over to HMRC when you've actually got the money in from the customer.
Okay. On expenses, I've got my small company, I'm all set up. What things can I charge out for? Like mobile phone?
Yeah, so again, it's very important with a limited company to make sure any contracts are in the limited company name. Otherwise, there can be sort of other tax and national insurance.
So if I've got my mobile phone,
yeah,
it's in my own personal name.
Mm-hmm.
Can I charge that against the company?
I would suggest instead that you get the mobile phone contract in the company's name, because that way it's deductible expense for the company, and there's no tax on national insurance on you or the company. So if it's in your personal name, it can mean that the company is paying a personal liability for you, which it's
a benefit.
Exactly. It's treated the same way as the medical insurance or the healthcare that we were talking about earlier.
Okay, so I work from home 3 days a week. Can I charge for that?
So there is use of using your home as an office. There are either there's a simplified way of doing that. So HMRC actually give you set rates that you can use, if particularly if you're a sole trader. It can be sort of £10 a month or something like that, just to cover those costs, or you can calculate it a bit more accurately.
So would you as in the bookkeeping, would you keep a record of all those things, or would you wait until you've done your end of year tax with your accountant?
Yeah, so you could do either. So you could either do it periodically, like monthly or quarterly, but it can be quite a lot of extra admin. So what tends to happen is that you look at the end of the year, how much have you
works,
exactly? Yeah, that's it.
And keep everything within the sort of guidelines.
Yeah, exactly.
Basically.
And then what would happen is the company would then owe you that money to reimburse you for the cost that you've paid personally for using the home as an office.
So because a lot of people are working from home now, aren't they?
Yeah, that's it. There's less office space being used, so it saves the company money as well. It may be quite a bit more expensive to rent somewhere with the extra rates and all of that comes with it. So particularly in the beginning, when you're starting up the company, it might be better for you to use your home to run the business. Yeah, exactly.
So I now need to get myself a company van.
Yeah.
Buy it, lease it?
So that is really something to consider. So either option. So if you lease the vehicle, then the company will just pay the monthly payments. It will be able to reclaim any VAT that on those payments, and it's an expense, so it reduces your taxable profits. If you and you're only paying the monthly amount. So alternatively, if you buy the van outright, then obviously there's quite a big outlay. So you'd have to look at the cash flow and making sure that you've got enough cash to buy it outright. But the company again gets full tax relief on a van as long as it meets the definition of a van per HMRC guidelines. Then it gets the full tax relief in the year that you buy the van.
And what about a company car?
So company cars slightly different because there is quite often personal use on the company car, which is fine, but it counts as a taxable benefit. So the company can buy the car or lease the car. It can pay for all of the motor expenses and the car insurance, but you personally will be taxed on the use of that vehicle.
Usage.
Yeah, exactly.
And that would be what, put on your tax return?
It is added to your tax return as extra employment income. And then the company pays national insurance, 15% national insurance on the value of that benefit too. So there's a bit of extra cost. Electric cars are have quite a low taxable benefit value because sort of people encouraging people to buy electric.
Yeah, no, that's interesting because a lot of people don't really understand the difference between buying a van outright and leasing it. And what's the benefits? Yeah,
I think it comes down to cash flow, really.
Cash flow, whether you've got the money there to buy it.
Yeah, exactly.
And things like that. Because it's the same with if you've got a company that's buying machinery.
Yeah.
It all comes under the same thing. Did you still have it sort of like, do you lose the tax over a period of time, the lifespan of it? Or?
So what we would do in the accounts, we write off the cost of the asset over a useful life. So if you think that a bit of equipment would last 10 years, every year we'd write off 1/10 of that cost as depreciation in the accounts. for the tax purposes, and that's treated slightly different. So that's actually set by HMRC. So if it qualifies as plant and equipment for capital allowances, then you can get 100% of that cost to reduce your taxable profit in the year that you bought that bit of equipment.
Right, so we're there really. We've basically set the company up. We know what we're doing. We've got ourselves some staff. We've got some pensions insurance. So we're generally set up. So basically, we've basically gone to stage 2 now. Mm-hmm. So basically, we've got that. So what I think I'll leave it there, because the directors' company responsibilities are a bit more intense. Mm-hmm. They're going to take a bit more time. Yeah. But we'll also get a little bit back on some more packages. I think people might like to know a little bit about Zero Sage and what the difference is there. Mm-hmm. So when we come back next time, I'm sure everyone would be interested to see what the benefits are of those packages and what the costs are and things like that. Yeah. And then we'll move on to a little bit more tax, corporation tax, things that are a little bit more challenging. Yeah. So we'll give ourselves a bit more time so that people can throw a few, because we've got some people going to be sending in some emails and asking us some questions. So we'll answer some of the questions as well.
Yeah, happy to.
So thanks for coming in again.
Problem.
I'm going to get you here again. Unfortunately, you're going to be here on a regular basis and you'll be showing people the way forward, and we will get a lot more questions now, so it'll make it a bit more challenging for you.
Yeah, no problem. Thanks for having me.
Yeah. And I'll see you again next time.
Take care.
Thanks, Lorraine.
Bye.
Thank you.